The famous money market funds. This is the best topic or title that I found for this particular video. Now, money market funds has, or majorly known as MMF, has been the talk of the town for the last few months, to a point that you could almost mistake them for the ongoing scam, or maybe something like a pyramid scheme. But it's interesting to note that money market funds has been there for quite some time. Maybe it's just that people do not have information about them, and it's quite good that we are in the era of having information. I think right now Kenyans has information about everything than never before. So that's why people are getting to discover new things each day. So, but the MMFs, okay, in this video, let's use MMFs to refer for money market funds, because that is the most common name that people will be able to associate with. Now, MMFs are not a new thing. It is just that people have come to learn about them in the last few months or 1 year or so. And I'm sure that there is someone who is still struggling to understand what is a money market fund. He has tried to pick information from that person, and maybe he or she is still in the woods. They are yet to fully understand what is this thing all about. What is this thing that everyone is talking about is all about, and that's why I decided to make this video, and let's have a discussion of everything that you need to know before you dip your feet into this thing called MMF. Now, I have listed quite a number of areas that I would like to discuss when it comes to money market fund, all the way from definition to my parting shot. That is my thought about money market funds. So let's have this discussion, and it's good to make it clear that I'm not working for any company offering money market fund. So allow me to give every information about money market fund. The good, the bad, the ugly, everything. So there is no any conflict of interest. So I'm about to give all information pertaining to money market funds. So let's go. And if you have seen my other videos, in everything that we get to discuss, we'll always start by trying to define what we are discussing, because basically I say that don't invest in something that you don't understand. So the first point should be understanding that particular investment before dipping your feet in. So let's start by trying to define what is a money market fund. Now, and since this channel is meant to explain things in a layman's language, or that is a language that everyone will understand, I'll not go for a book definition that you'll Google in the internet and get to understand. But allow me to define a money market fund as a low risk, low return investment where you get to invest your funds in whatever frequency that you are able to, and the return of that investment that you get to make is in terms of interest. So, and it is good to note that it is a low risk, and therefore it is a low return investment. So it is not a get rich quick scheme as many people might get to think. So when you are getting to money market funds, don't expect that much returns. This is a low risk, low return investment. You get to invest your principal and get some interest in return. So that is the basic definition of a money market fund. But for a better understanding, there is an analogy that I will always use when trying to define a money market fund, and takes me to my point number 2. I didn't have something to write for the first point. So, my point number 2, the big Chama analogy. So this is the concept that I use for you to understand the foundation of money market funds. Now, we have different types of financial investments because money market fund is a financial investment. When we talk about treasury bonds, treasury bills, money market funds, shares, all these fall under the category of financial investment. We have different kinds of financial investment in our financial system or in our economy. So we have different types of financial investment. And these different types of financial investments that exist in our economy have different features. You will find that there is an investment that you'll have some minimum amount for you to get to engage in that investment. The other thing is that we have different kinds of investors in this financial market. The other important thing is that we have people with different financial muscles in the same financial market. So, you need to find an investment. One, you need to find an investment that matches your financial muscle. By this we mean, there is that investment that you will find that for you to get started, you need a minimum of 50,000. An example is the treasury bills and the treasury bonds. You need at least 50,000. But is it everyone who wants to invest in treasury bills and treasury bonds who can afford 50,000 at a glance? I'm not sure. Now, when I talk about the big Chama analogy, this is what I mean. I will use the example of these 3 guys here. Let's have a guy number 1. Let's use someone that we can all relate. We have a farmer. So this farmer gets to engage in their farming activities and make some returns out of that. Now, let's say that he makes his returns on a weekly basis. So he gets his returns on a weekly basis. How much does the farmer make in 1 week? 10,000. This guy makes 10,000 on a weekly basis, but he has he wants to put some money aside. In fact, let's assume that it is the 10,000 that the farmer wants to put aside for future use, for a rainy day, for their emergency funds. And now that he is someone who is financial literate, he understands the difference between saving and investing. So instead of saving the 10,000, this guy wants to invest the 10,000. And when he went to withdraw his money the last time in the bank, he had he read somewhere in the bank they have talked about fixed deposit account. So, and on inquiring, he was told that it is somewhere that he can be able to fix their money for a given period, say 1 year, and they get to earn some interest from it. So with the 10,000, he goes to his bank and says that he wants a fixed deposit account. But after engaging with the guy at the bank, he gets to be informed that for you to invest in a fixed deposit, or for you to open a fixed deposit account where your money will be able to earn some interest, you need a minimum amount of, let's say, 50,000. 50,000. But this guy has 10,000. So there is a mismatch between what he has and the minimum amount for the particular investment that he needs. So is this the end of this farmer getting benefits from a fixed deposit account in a bank? Is this the end? That's the question that we have. Let's leave that guy there and move to guy number 2. We go to a teacher. And these are just examples. Don't think that I'm undermining any economic activities. These are just examples. Whatever that you do for life, whatever economic activities that you engage in, I respect that and do the best that you can in it. Number 2, we go to a teacher. So this teacher is paid on a monthly basis. And out of the monthly income that the teacher makes, he has some 20,000 that he can be able to salvage. So 20,000 that he can be able to salvage. And he won't put this 20,000 aside for future use. Now, but he's a teacher, so he has some information. And information is key. Now, he don't want to save this money, but rather he wants to invest. And uko kwa staff room, he had a teacher talk about government securities, treasury bills. He had someone talk about treasury bills. And he wants to invest this 20,000 in treasury bills. But on gathering more information about the treasury bills, he gets to discover that he needs to have a minimum of 50,000. A minimum of 50,000 for them to buy, to be able to invest in treasury bills. He gets frustrated, and his investment of choice could not work out. So, but is this the end for this teacher who wanted to enjoy returns from a treasury bill with his 20,000? That is the question we need to ask ourselves at this point. Is this that the end? I'm not sure. Let's see. We move to the third guy. Now, here we have a boda boda rider. And as I had said earlier, I'm just giving examples. One of the people that I give respect to most, Majama. So it's not that I'm undermining whatever it is that they do. Nawaheshimu sana. So this guy has a boda boda, and after his daily activities, and after doing the maths, and after refueling his boda boda for the next day, getting expenses for that particular day, this guy, we start by noting that his earning is on a daily basis. His earning is on a daily basis. And each day, he realizes that he is only able to salvage Kenya shillings 200. But this 200 is what he wants to put aside for a rainy day. Is what he wants to put aside to form part of his emergency funds. And he is also informed akiwa huko kwa shade, hiyo shade yao, he had someone talk about this investment, fixed deposit, treasury bills, treasury bonds. Let's use the example of treasury bonds. But unfortunately anakumbuka mwenye alikuwa anatajataja hizi vitu, he said that the minimum amount that you should have for you to invest in treasury bonds is 100,000. Is 50,000. Now, is this the end of this guy who had a vision that he can get some returns from treasury bonds? Is this the end for him? He has to put his 200 in an account where they get to earn nothing. We'll get to answer that question in a minute. So is this the end? Now we have 3 guys, and we don't know whether that was the end for them earning return from an investment that they really wanted to invest in. And we get to discover that the challenge in all of them is one. There is a mismatch between whatever the amount that they hold and the minimum amount that is required for their desired investment. The other thing that we need to note is that they earn different amounts, and they earn that amount in different frequencies. One is daily, the other one is weekly, and the other one is monthly. Now, what can give a solution to these guys to ensure that they get to invest? That's where the concept of money market funds comes in, because money market funds is simply funds that have been pulled together from different people. That money is invested, and then the returns that is realized is distributed back to those people who had contributed the money. So when I talk about a big chama, this is what gets to happen. Now, we had the farmer. This farmer is somewhere in Nyeri. We had the teacher. This guy is teaching in Garissa. And we have the boda guy. Let's see, he's somewhere in Kisumu. Now, here comes the concept of money market fund with someone whom we call a fund manager. This is where we have a fund manager who brings a solution to these 3 guys. Now, this fund manager will collect the 20,000 from the teacher monthly. 20,000 monthly. This farmer, this fund manager will collect the 10,000 from the farmer on a weekly basis, and he will collect the 300. It was 200, I think, 200 from the boda guy on a daily basis. Then, what he will create, he will just create a pool of funds. This is what the fund manager will be able to create. And now don't see the 3 guys. Now we are talking about 1 million farmers giving 10,000. We are talking about 50,000 teachers giving 20,000. We are talking about 2 million boda boda guys giving 200 shillings at that frequency. So the funds, the pool of funds that we are talking about, we are talking about millions or even billions. Though I don't think there is a yes, there are funds that has such big amounts. So we are talking about billions. Now with these billions, the fund manager will be able to invest in the treasury bills that this guy could not invest in alone. With the huge amount of funds, this guy, once they go to the bank, fixed deposits, once they go to the bank, they are even able to discuss or to negotiate the rate at which the bank will fix their money. Are you together? So this guy alone could not be able to do a fixed deposit. But from the common pool of funds that was formed by all these people bringing their funds together, they can be able to do a lot of fixed deposits. And with large amounts, you get to realize that you can even be able to discuss the rates that you will be given by your bank. So the fund manager will get a return from the investment that he will make. He gets some returns from this investment. Then what he will do is that he will get some share, what we call the management fees, because the fund manager is not a charitable organization. It is a profit-seeking organization or institution. And this fund manager are banks and major insurance companies. So that those are the people that we are referring to as, those are the institutions that we are calling as the fund managers. They are major banks and insurance companies. So once they get the returns from funds invested, they will get what they call the management fees. And now, what remains, or not, okay, not really what remains, because of course the management fees is not more than what they distribute back. Then the net returns, let me call them the net returns. The net returns after the management fees is deducted is redistributed back to those people who had contributed to the fund. Of course, in the principle of the more amount you contributed, the more interest that you get to you gain. In short, it is given as a percentage of whatever you contributed. So these guys, all these guys are in a chama that they don't know. The chama is managed by someone we call a fund manager, but they don't know each other. All of them, they only know the person who manages the chama, who is the fund manager. So that's why I say a money market fund is like a big chama of people who don't know each other, but they all know the guy at the center point, who is the fund manager. And why do they form this big chama without knowing? They form the chama to bring their funds together to create a common pool of funds. With the common pool of funds, they have the ability to invest in different ventures, and in some of them, like the fixed deposits from the banks, they have the chance to get better returns than when you can do that as an individual. I hope you get now the concept of money market fund. Using the analogy of the big chama, we come together without knowing each other. We create a common pool of funds. That those funds are invested. We redistribute back the returns as a percentage of what we had contributed. That is simple. Now, I'm now sure that you understand the concept on which money market funds are formed. Thank you for understanding. We go to my point number 3. Now, my point number 3 there is on the interest rates. We said that it is a type of investment, so we expect some returns, and the returns that we get is in terms of interest. So, the interest rate that you earn from a money market fund is solely dependent on the fund manager under which you have contributed your funds. We will share a list of the different companies that offer the money market fund services in Kenya, because we will have a fund manager A, B, C. Once they collect their funds, they will invest in different avenues. Though there is the Capital Market Authority, we'll talk about that. There is the CMA that regulates the avenues in which this money should be invested. Of course, they will not get similar results. So, the interest rate that you get from your fund manager is dependent on the return they get from the investment that they made with the funds that you contributed. So if they make more returns, they give you more returns. If they make less returns, they give you less returns. So the interest rates of different money market fund will differ. But of course, there will be a range for which the money market funds will be running. Like currently, I think it is somewhere between 12% and 16%. This is where, and that is per annum. This is where the interest rates for many money market funds are lying currently. But this is dependent on the company that you choose. Let's move to another point. We talk about taxation. This is actually number 4. I said that I'll give the good, the bad, and the ugly of money market funds. And one of the things that someone who is an agent of a money market fund company or an agent of an insurance company, one of the points that they will not shout is about taxation. But now that I don't have any conflict of interest, I'm just giving information as it is. The interest that you earn from money market funds is subject to withholding tax. And that is common for, I think it is only the infrastructure bonds whose interest is not subject to withholding tax. So otherwise, any other interest that you gain from any investment in Kenya right now is subject to what we call withholding tax. And currently, it is standing at 15%. So the interest that you earn from a money market fund, whether you like it or not, it is subject to a 15% withholding tax. The interest that you gain, you'll get the 85% of it. 50% kwa serikali. Now, let's move to the other point. I see I have named my other area that I would like to touch on as interest calculation and compounding. So we are at number 5. Interest calculation. And compounding. It is good to mention that this is one of the biggest good things that I find with money market fund. The fact that they apply the power of compounding, and compounding simply means your interest from your January interest forms the principal of your February investment, and that's helped to create more, to broaden your principal, and therefore enabling you to earn more interest. But let's see how interest on money market funds is calculated. Be very keen, because this is the real thing. This is the part that you get to understand what is the benefit of investing in a money market fund. Let's go. The first point that I want to point out is that interest is calculated on a daily basis. On a daily basis, and reinvested on a monthly basis. So interest is calculated on a daily basis and reinvested on a monthly basis. It is good to note that interest in money market funds change on a daily basis. Interest on money market fund change on a daily basis. And one of the places where you can get the interest of your money market funds on a daily basis is on the newspapers. There is a page on investment on every day in the Daily Nation, on the Standard Nation, on the Standard paper, where you get to, now you get the rate of the previous day. So you can be checking that page to see how your money market fund is faring. And now that interest is changing on a daily basis, it means that interest has to be calculated on a daily basis based on the amount that was in that fund on that particular day. Then the interest that you accumulate throughout the year is reinvested to your fund the following month. And I want us to use an example of I like using 100,000, but because we are talking about money market funds, which I consider to be a kind of a starting point, allow me to use 10,000. So I'm using an example of 10,000. So we are in January 2025. So let's say someone who had said that they will start investing in 2025. So on 1st January, they deposited Kenya shillings 10,000 in a money market fund whose interest, get me here, I said that the interest changes on a daily basis, but I'm not saying that today the interest will be 2%, then tomorrow the interest will be 50%, then the other day the interest will be 1%. No, you find that today it will be 12.05%, tomorrow it is 12.06%, the other day it is 12.7%. Like there's no much changes in the interest rate. The interest rate is changing, yes, but not with so much margins. I hope you get me. So let's say, let's assume this guy invested in a fund manager who is giving 13%. And when I mean 13% per annum, 13% per annum is meaning that January 1st, the interest was 13.1. The interest in January 2nd was 13.2. The interest in January 10th, 12.99. January 15th, 13.01. Like the rate is around 13%, because we cannot calculate interest for each day. We assume an average rate of 13%. So we are taking an average of 13% the whole month. So let's see. We'll calculate the interest for 1st January. 2025. Now, we go back to some maths classes that we got from our primary school and high school. And we know that interest is a product of principal rate and time. And we have the three. So our interest will be the principal is 10,000. The rate is 13%. And the time is 1 day, and our year have 365 days. So that is the principal for January 1st from an investment of 10,000. We go to our calculator. So we get, can start by saying that, answering this two. $1,300 times 1,300 divided by 365. So this brings us to Kenya 3.56. Now, so if you have 10,000 in a money market fund that is paying 13%, an average of 13%, you'll earn an interest of 3.56 shillings on a daily basis. Then we have that 1 days in that month. So that will be Kenya shillings 3.56 on a daily basis times that 1 days. Let's see how much it will be worth by the end of the month. So this brings us to a total of 110 shillings and 36 cents. Now, as you can see, these numbers are not much, as we had said that this is a low risk, a low investment, a low return investment. Now, this is the interest that you earn in the first month of January 2025. Now, when we come to February 2025, your new principal will be on, and this is assuming that you are not adding any you are not stopping up to that fund, but you have the freedom of topping up, and we will come to that when I'm talking about something I'll call reality check. This is an assumption that you are not topping up your money market fund. This is so the new principle will be 10,000 that you invested plus the 110.36 interest that you earned in January. So the new interest will be 110.36. So when you are calculating the interest for the month of February, this will be our new principle. So that is the concept of compounding. So that is how interest on money market funds is calculated on a daily basis, then reinvested on a monthly basis. I hope my point is very clear at that point. Then let's move to the other point. So my number 6 point is the risk. Anytime that you are thinking about investing, the two critical things that you get to think about, number one is return, and number two is risk. So, as I have mentioned severally, money market funds is categorized as a low risk, low return investment. And the risk in money market fund, we are just trying to ask ourselves, what are the chances of you losing your funds in a money market fund? So the risk is relatively low. I don't want to say that it is not there because I will be lying. There is no investment that you are guaranteed that you cannot lose your money, even in the government securities that sometimes you tend to refer them as risk-free. I'm sure that things can get really bad and even the government gets to default. But the risk in money markets fund is relatively low. And just to give a few insights, I don't want to get too deep into this. But there are some prayers that has been put in place to ensure that your money in the money market funds is safe. Number one, we have the regulator. And that is one of the factors that you need to consider before joining a money market fund. You need to understand whether it is regulated by what we call the Capital Market Authority, popularly known as the CMA. I know the Catholics gets to be confused a bit here. We are talking about the Capital Market Authority when we talk about CMA. So there is the regulator. This is the guy who has been put in charge by the government. This is a governmental organization that is in charge of checking and controlling the money market fund. That is the fund managers. It is the same way that you hear that banks are regulated by the CBK. CBK is there to check on what the banks are doing and giving some rules here and there. So the Capital Market Authority is there to throw some regulations and some rules to the fund managers, and they need to hit to the regulations of the Capital Market Authority. That is one way that your money is protected. The other thing that I would mention that gets to make your money a bit safe is someone we call a custodian. And from the word custodian, it is custodian means that something has been put under the care of that particular person. So every money market fund, okay, when we talk about money market fund, the money market fund is owned by the fund manager, and that is the company that is offering the service, the fund manager. But every fund manager must have someone that we call a custodian. And according to the rules by the Capital Market Authority, the custodian of a money market fund should be a commercial banker that is regulated by the Central Bank of Kenya. So the custodian must be a commercial bank regulated by the Central Bank of Kenya. So this guy is the one who holds the funds by the fund that this guy is managing. So even this guy was to go down, he ought not to have the money by himself. This guy should have the money. So even I think there is more risk in the custodian going down than the fund manager going down. But we know that when a commercial banks go down, this guy chips in and gets to ensure that depositors do not lose their money. So that is those are the layers that has been put there to try and ensure that the money market funds are safe. The other thing that makes them a bit safe, the regulations. An example of one of the this guy, the Capital Market Authority, dictates how the funds should be invested. And one of the regulations that is given is that not more than 25% of the funds that this guy holds should be invested in a single investment avenue. So even if that investment avenues was to go down, only the 25% of the funds will be affected. Because let's say a fund manager who decides to invest everything, all the funds in shares, then the market shares gets not to perform. It means that your funds will go down with the fund manager. But he is regulated to ensure that he invests in different avenues, not investing not more than 25% in a single investment avenue. And of course, their protection comes in a form that we might reverse to as diversification. So, in a nutshell, money market funds are relatively safe. So the risk is there, but the risk is minimal, and that is why you are even getting less returns. We move on to our next area of discussion. And number 8 is what I would call hidden charges. And the reason why I have put my subtopic in quotes is simply because I believe these are not hidden charges. It's just that you get to limit your research on the investment that you want to make, and you don't discover all the charges that will be involved in that particular investment. So these are not hidden charges, but these are the charges that you will encounter in the process of dealing with the money market fund. And number one cost that you will incur is the transaction charges or the depositing charges. You get to realize that money market funds gives you flexibilities of investing at very regular frequencies, and you find that majority of these deposits into the money market funds are done through M-Pesa pay bills. And of course, paying to M-Pesa pay bills will attract some charges, not for money market fund, but to any charge, to any pay bill. So it is not a hidden charge. It is just something that you will not think about before getting to transact. And then when you are going to deposit the money, you will start saying that you are being charged to deposit money into a money market fund. Number 2, management fees. We said that majority of these fund managers are insurance companies and banks. And these are not charity organizations. They are not non-profit organization. They are not They are here for profits. So they are not doing all this management thing for free. So from the returns that they get from the investment that they make from the money you contributed, they need to pick something. And the management fees for the majority of the money market funds is around 2%. So 2% of the returns that they get from the investment belongs to the fund manager. That is not a hidden fee. It is what he gets to benefit from putting the funds together, investing them, such. He had to pay himself 2%. And the interest that you'll see on the newspapers, those are net interest. So they have already deducted their management fees. We go to number 3. Number 3, I have already mentioned about it, withholding tax. 15%. This is not a hidden charge. It's just that you limited your research before joining a money market fund, or the individual who told you about money market funds. He did not mention about it, but be prepared that any amount any interest that you gain, this is the interest, not the principal. This is the interest. Will be subject to 15% withholding tax. And of course, number 4, at the point of withdrawing, like any other financial institution, like any other mobile banking platform, you will have to pay for some withdrawing charges when you are withdrawing money from your money market fund account. So these are the charges that are in the entire system of investing in money market fund. People might refer to them as hidden charges, but they are not hidden. They are in the open. It's just that we don't take time to learn about them. Now, let's move to my point number 9. We are almost there. My point number 9, it's very simple. Why a money market fund? I'm asking myself, why should you consider a money market fund? You are this person who has been saying that I will start investing, but that never gets to happen. And now, this is 2025, and you have decided to actualize what you have been saying. I believe money market fund is the best starting point that you can start when you want to start your savings journey. That is the starting point. You might have ambitions of having or investing in government securities, but you don't have that 50,000 in at a glance, and you'll never get. Okay, no, sorry, but anytime soon, you will not have 50,000 coming in a single transaction. So if you decide that you invest in government securities, you will never get a chance to invest in them, simply because you will not have a single transaction bringing in 50,000, but that is required in a money market fund. So the reason why I find money market fund reasonable, or a basic starting point that you can take, one is on the flexibility. And you can deposit any amount. Okay, okay. Let me allow me to make this clear. There are some money market funds that have limitation on the minimum amount that you can deposit in a transaction. You find that some money market funds have limitations of maybe 500 as the minimum amount that you can deposit, 1,000 as the minimum amount that you can deposit. But some have no restriction on the minimum amount. You can deposit as low as 10 bob. So this is an avenue that gives you a chance, even if you are paid on a daily basis and you get to salvage 50 bob on a daily basis, you have a chance to put it on a money market fund. Number two is that your money will still be accessible. Accessibility. Or in financial terms, something we call liquidity. In fact, a money market fund is somewhere that you can put your emergency funds, like that amount of money that you ought to hold for the unknown. You can have it in a money market funds, because for majority of the money market funds, you can get to withdraw your money instantly. So you will still earn some returns, but still have access to your money. This is a golden combination. You have access to your money and you are still earning some returns. So the flexibility, the accessibility, and so what else? Can I talk about financial discipline at this point? And this majority goes on spending. There are some people who have this notion that if they start savings for a rainy day, it rains immediately. But I believe that accessibility of money is something that influences our spending. So if you decide to save your money in M-Pesa, and everywhere that you go nowadays kumeandikwa lipa na M-Pesa, it means that this money can easily move from this M-Pesa to this other M-Pesa. So you can easily spend that money. But there is no place that I'm yet to see a shop that is encouraging lipa na money market fund. Bado hakuna hiyo. So the chances of you spending this money while it is here it is not as it is high than when your money is in a money market fund. So that can be a way of trying to control your spending, because majority of people have not started their savings journey because of their spending discipline. They put 1,000 aside today, they use it tomorrow. You can get to research on a money market funds. I know there are companies that have restriction on the amount that you can withdraw at once, after how long you can withdraw. There are also companies also offer some kind of money market fund that you might hear them talking about something to do with fixed funds. Like once you deposit the money, you choose a period for which you have to fix that money. Like 3 months. You can only access that money after 3 months. That will be a way of creating a spending discipline for yourself. So for many reasons, as a beginner in your savings journey, you have all the reasons to pick money market funds as your starting point. My other point is something I'm calling a reality check. Reality check. Now, let me say that I am not a motivational speaker. I will not cheat you that you'll be a millionaire by investing in money market funds. And if you get to listen to people and get to hear those people talking or having a negative attitude towards money market fund, is basically out of the raw returns that comes from a money market fund. And those people are right. It is a raw return investment. And we have seen that, we have done the math ourselves and seen that if you deposit 10,000, you only get 106. In fact, I forgot to subtract. It was 110. 110. I forgot to withdraw the withholding tax, but let's flow with it the way it is. Now, from the 110, let's give the real figures. If you get to invest 110, from this 110, we need to subtract withholding tax. So our net comes to around 93.806. So this will be our net return. So for 10,000, you get to earn an interest of 93.8 per month. If you get to multiply that by 12, though the principal will be increasing, so I expect the interest to go on, but roughly you'll get how much? Let's say 1,200 from that amount. So you see, it is not much, because if you start the year with 10,000, you earn 1,200. This is January. So December you'll have 11,200. It all depends with how you see it. You'll have moved from a 10,000. if you decided to put this money in your M-Pesa, for once kufikisha nayo December ingekuwa ngumu, then hata ingefikisha December ikiwa bado 10,000, but you get to December while it is 11,200. At least there is some value addition in that. So this is the real thing. This is the real figures that you get from a money market fund, and that is why I said we call it a reality check. We talk about real things. You are not getting that much. I will not stand here and lie to you that you'll get that much. Statistics have it. The figures have it. Put 10,000 in a money market fund, giving a 13%. By the end of the year, your 10,000 will just be 11,200. But the figures are not much, but I'm one of the advocates of money market funds, because this is with an assumption that you deposited 10,000 at the starting of January and you never deposited any other amount in that account. Now, think of it in a scenario where you'll be able to deposit 10,000 every month. Think of it in a scenario where you'll be able to deposit 100 every day, 5,000 every week, 20,000 every month. For you to benefit or to see the benefit of a money market fund, you need to be patient. That is number one. Your first interest that will be credited into that account, we can even be 10 shillings. I remember the time I opened a money market fund, my first interest that was credited in that money market fund account, and that is something that I can prove, is I think it was 5.0 shillings, if I'm not wrong. 5.0 shillings. This is the first interest that I got from a money market fund. But that was about close to 2 years ago right now. And you can be sure today that I don't get 5 shillings monthly. You can be sure that I have been patient with it. I have been depositing the small amount as much as I can. I have been allowing my interest to compound. Like, I'm not there after every month. Once the interest is credited, I want to withdraw it. No. For you to see the sense in money market fund, you need to give it time to compound. That's the reality, and that's why I got this subtopic, reality check. Like, give the fund some time to compound. Don't be there, you are depositing today, you are withdrawing tomorrow. Don't be that person that the moment you get your interest, you are there withdrawing it. Now, reality check on money market fund. You are not gaining that much, but that money is better off in a money market fund than in a bank current account earning you zero interest. The other reality that you need to note, give it time to compound. Like, don't be every time you are withdrawing, you will never see the benefits of money market fund. Be patient with it. You cannot earn an interest of 5,000 monthly from the first point. Like, start with those baby steps, and you might be discouraged the first few months and see like this thing is not even making sense. But just give yourself time, deposit those small amounts, take the advantage of that element of flexibility, and with the time, the money market fund account might start making more sense to you. But I can guarantee you that the starting point will be very discouraging. Ukiona interest ya 5 bob imeingia kwa account, maybe, but don't get there with so much expectations. This is something that needs a lot of patience. This is a starting point, so be ready to start with those baby steps. And I think I'm done with that point of reality check on money market funds. We are almost concluding this discussion. I know it has taken quite some time, but I hope it will be done in a few minutes and you will get to benefit. So number 11 is on factors to consider. So there are I think there are roughly about 30 companies that offer money market funds in Kenya currently. What are those factors that you need to consider when opening a money market fund account? And number one, number one is returns. We know that we are all human beings. The more the returns, the better. So you are likely to go for that company that is offering a higher return. So get to see the list of companies and see the kind of returns that they are offering. Number two, we have the risk, or we call security. How secure is your money? So go and see the factors that we discussed in that part of risk. How reputable is that company that you want to choose? Now, how reputable is the companies that is that particular company that you want to choose? Who is the custodian? For how long has that company been into existence? I don't want to mean but that the older the company, the more secure it is, because no company is so big that it cannot go down. But I strongly believe that you see, there are companies that we can call household names. You see, the way everyone thinks that kila dawa ya meno inaitwa Colgate, kila shoe polish inaitwa Kiwi. Those are just brands. But you see, they have become part of our life because we recognize them. They have been there for quite some time. There are also companies that have been there for quite some time and they have become household names. I believe those companies are more secure than those companies that are coming up right now. The other thing that you can consider is the minimum deposit. Don't go for that company that restricts you to minimum deposit in 100. You might not be able to have 100 to invest so many times. So go for that companies that the minimum amount you can invest is 1 shilling. Number 4, withdrawal process. You can see this. You can view this in 2 ways. Number 1, money market funds are supposed to give you liquidity. Like, I need my money now, I get it now. So go for that company that will assist you to get an instant withdrawal. Again, if you have spending issues, if you have financial discipline issues, you can look for that company that have some restriction. You see, if you have to be whipped for you to have some discipline, then go for it. If you want a company that have some restriction here and there, go for that. You can also consider something like technology in a company that you choose. Go for that company that you can access your statement anytime on your phone. You can access your balances anytime. You can withdraw your money anytime by either using an app, either using a USSD code. That company where you can easily deposit using a pay bill, such. So those are some of the factors that you can get to consider, and that takes us to our next point of the available options. Available options. So here I'm just talking about companies in which you can open a money market fund account. And as I said, this is a very free and fair discussion. I'm not biased towards any company. So I'll give out the names of companies that are running money market funds in Kenya. And this information, in fact, I'm reading from a page of a Daily Nation where the rates are listed on a daily basis. So I'm reading them from a Daily Nation page. So I'll read them quick first. And at number one, we have by number one I mean is the company that have been listed on top there. It is not number one in anything. We have African Alliance Money Market Fund. We have Avocap. We have Old Mutual. We have Britam. We have Etika. We have Mayfair. We have NWealth. We have CIC. We have Equity. We have Kuza. We have COP. We have GovCap. We have APSA. We have Madison. We have Orient Kasha. We have Jubilee. We have Lofte-Cobon. We have Seaton. We have NCBA. We have ICEA. We have Britam. We have KCB. We have Apollo. We have Sannam. Those are the ones that you can see on the list. So you hear that you have a lot of companies that you can choose from. So just do your research and go open that money market fund account. And my final point, that is my take. I think I have already mentioned that in the course of my video. I take money market funds as the best starting point of your saving journey. So if you have been telling yourself that that you'll start saving, this is the point to start. This is the avenues that comes with a lot of flexibility. This is the avenues that give you a flexibility of the minimum amount that you can afford. This is the avenues that gives the flexibility in terms of the frequency at which you get paid, the frequency at which you get your money. So if you have heard about money market fund somewhere else, I'm sure that you have been able to understand and internalize the whole concept. So don't wait any longer. So if you have been thinking of having a money market fund account, take that step. Otherwise, I hope you have got it to learn something new that you didn't know about money market fund. You can drop that comment in the comment section. what you would need clarified or what I didn't mentioned, and also you can also confirm whether you understood whatever that I have been saying, ama ni wakati tu tumetupa. Otherwise, see you in the next video.